Okay, good expiration Friday, February. Options expire today. Again, the bottom catchers continue to be out all day yesterday, telling us that they've never seen a better time to buy, and yet we go lower. Until everybody is done trying to predict bottoms, you won't put in a bottom. It's pretty simple. Let the price tell you when the bottom is in, and again, wait for confirmation. Any rally right here is going to be a bear market rally. We're not going to go right back up to 1,200, 1,300, 1,400 here overnight. So you got to get that through your heads. If you're a long-only guy and you've been getting just a 55% haircut with your value manager, check yourself and find ways to make sure that this doesn't happen in the next 10 years when we do get into a bull market again. Learn how to trade when you're in a trader's market. This is a trader's market, and again, I say this every day. I come in, I don't want to be short long-term, I don't want to be long-term. I want to be a trader right now in this market because this market is entirely dangerous on the long side, entirely dangerous on the short side, and you should only be trading in this market. And if you don't have the skills to trade, either learn them. It's a skill that you can use to fish the rest of your life, or go to cash. Cash is not trash. Cash is an investment. Matter of fact, if you went to cash December of 07, when the charts told you to go to cash or get short, you saved yourself 50%. So that's a 50% return in my book by not being in the market when the signals told you to get out of the market, and they did on a couple simple things that you can learn on charts. Told me in November, December of 07 that the interim bull within the context of a longer term bear market was over, and we continue to be in a bear market only really 15 months into it. So we've got a long way to go. I expect at least 3 years of this bear market activity. So you got another year and a half at least until you'll even see the charts, the time on those swing it back up. So that being said, it's 765 this morning, well below the pivot. The pivot is 780, so we're a good 2 percentage points above the pivot. Another gap. The November low of 739 is in our crosshairs. Oil is down. Again, if you haven't been short for a while, this is a treacherous time to begin to start shorting stocks, shorting futures. So this again, you have to wait to trade this market, and right now, being that it's an expiration Friday, we're breaking new lows in the transportations, we're breaking new lows in the Dow Industrials. Now we have to go test the lows for the S&P, which is down there about 739 in the futures. So that's still another 26 points away, or another 3 or 4%. Now, are we just going to bounce right when we get to the easy double bottom? I have no idea. But if we slice through it, it could get really ugly, and we could finally get to that 600, 650 level that I've been talking about over the last bit of time. I don't know if we'll see that next week, but we're getting oversold. We're getting stretched well below, say, a 40-period moving average on a weekly chart. That gets you up to about 1030 on the S&P. So we could rally very hard all the way up to 1030, 1050 and still be in a bearish market. So think about that. That's a 50% move from where we sit today at 765. If we were to go up 300 points, nearly 50%, we'd still be in a bear market. And I expect at some point during this bear market we will have at least a 50% bounce. When that will be, I have no idea. But you'll have time to get on once the tides change. I mean, the very first step you want to see is, a couple days where you take out the previous day's highs. We have not done that in a long time. And previously we were talking about the 800, 875 area. Well, guess what? We broke the 800. So now that 800 that was support now becomes resistance on the upside. So you've got so many layers of sellers that just want to get out at break even now that it's going to be a long time before this market recovers. The economic context, not only are we oversold, but the economic situation is getting worse. It's not getting better. Jobs continue to be laid off. For me, the simple solution to all these housing problems is stop the protectionism, let educated people move to this country, fix our educational system, get new technical solutions and jobs out there, But giving people money for the sake of giving money and preventing them from foreclosing when they shouldn't have been in the loan in the first place. And to me, hey, if you're living in your house and you can afford your payment in the first place, great. But a house to me isn't an investment; it's a utility. It's somewhere where you live. And if you paid $1 million for your house just because you thought it would go up to $1.5 million, well, that was the wrong reason to buy a house, and you shouldn't be in it to begin with. So again, there's a lot of inventory out there. There's a lot of people that have second, third, fourth, fifth homes that don't need all that. And the only way that over inventory, that glut's going to be stopped up, is by new people coming in to buy those houses. And the new jobs aren't being created, and protectionism will not allow that inventory to be, and that glut to be sopped up by new people if you don't let them come to this town, come to this country like we have always in the past. This is a free country. Let people come if they want to come and work and live in our country. Please let them do that. So, anyways, that is one solution that nobody's talked about. It's more along the lines of let's protect ourselves, but you need demand to get rid of that supply right now. It's basic 101 econ, and nobody's talking about it. Interest rates, yes, they're low, but guess what? Jobs and job creation are low, and that's going to continue to go that way. And the root of the problem is education and jobs, and nothing is being done right now to address those issues. So throwing good money over bad, bad money over bad, bad bank, good bank, bad bank is all garbage. All these policies of governments, state governments now are desperate. They're all hurting for cash. Local municipalities hurting for cash. And until you get, the problem that they're trying to fix, they're throwing more money at the same problem, giving free money away, easy credit. That's just going to create inflation, higher prices, and less jobs. It's called stagflation, folks, and it's happening right in your face. That's what I call it, stagflation. Look it up on Wiki. Check it out. That's where we are. Until you can get the demand to come in to equal the supply, nothing's going to change. All this is just false, false, false. Peace. Have a good day. Trade them well. Again, 765. Gold's pushing 1,000 here on the open. Gold wants to run and test that 1024 area that it hit on its high recently, and we're only 24 points from that. So everything you can see is converging here at the same time to highs and lows on the respective markets. Oil's down another $2 today as the push to $25 a barrel continues. So think about this today. Again, you want to catch knives, go ahead, but at least wait for the previous day's high to be taken out before you give yourself at least a lower risk entry. If you don't understand that, then you shouldn't be in the market. It's pretty basic stuff. But again, we continue to go lower. Looks like we are going to test the November lows. Nobody believed we would. But again, we were not overly bullish. If you want to play some long side stabs, buy some calls a few months out, that type of thing. We're definitely going to get a bounce, and it could be vicious. But I wouldn't be picking. I definitely limit my risk with picking some calls. They're not that expensive in here. Volatility has come in, and might be a good time to buy some SPX calls and things like that. But just don't go crazy. I think with a couple small stabs, you can make some good money if we do get a bounce. But I still think 600 is in the cards at some point. May not be right here. Maybe another year down the road. But I still think we'll see 600, 650 at least. 61% retrace is from 1570 gets you down to about that 600, 650 area from the way I see things. So that will still be an area that will be seen, and look for that 600, 650 over time. Oil down to 25 at some point this year. Apple will go to $40 to $60, and RIM will go to 20 to 25. That's it. Have a great day, and peace. Have a great weekend. Be careful out there.